So I've had random people come to my DM asking me, Kojo, do you trade NFP? Which basically is the non-farm payroll. And I'm like, no, I don't trade NFP. But after a lot of people coming to my DM continuously asking me, I just thought it wise to perhaps shoot a YouTube video teaching my lovely YouTube subscribers how to trade the non-farm payroll. So if you really think about the non-farm payroll, the basic thing about it is that you can understand it as the unemployment rate for United States, right? So rather than them calling it the unemployment rate, which every other nation would basically call it, they call it the non-farm payroll, right? So the thing about the non-farm payroll, specifically for the United States economy, is that it is released on the first Friday of every new month, right? So the first Friday of every new month, automatically every professional trader knows that in the United States a very important fundamental data is going to be released, which is the non-farm payroll, right? So when I actually started trading, there were certain times where I was incredibly taking advantage of the non-farm payroll, right? So if you really ask any successful trader who has been on the market for, let's say, about 5 years plus and constantly being in the market, you'd realize that gone are the days about 3-4 years ago, non-farm payroll was like a really big deal, right? On Fridays when NFP is going to be released, every trader is kind of alert, you know, with all our trading skills, all our trading nuggets, trying to trade a non-farm payroll and then catch that volatility, right? So these days, right, it hasn't been so much hype about the non-farm payroll again because the volume or the volatility that non-farm payroll used to carry has somewhat reduced, per se, like maybe about 50%, right? I would personally say that it doesn't really entice me with the way we see these kind of spikes, right? These days it's unpredictable to know if there's going to be like a massive spike in the non-farm payroll. Sometimes it can really be like dead. So sometimes literally sitting by your screens waiting for non-farm payroll to take advantage of it can totally be like a waste of time. Nonetheless, I'm going to show you guys 3 possible ways to trade a non-farm payroll. Gone are the days we used to use the orders, right? You can use the sell limit, buy limit, or pending orders, right? Buy stop, sell stop to trade a non-farm payroll, right? Not what you're literally doing is you're trying to place what a buy stop above the current trading price and a sell stop below the current trading price when it's about few minutes before the non-farm payroll is going to be released. Sometimes, let's say 1 minute or 2 minutes before time, you place your buy stop, let's say 5 pips away, sell stop 5 pips away, and then once volatility sets in anywhere the market spikes to, then it can trigger your order and then you make some money. So it was only a successful setup for a long time until obviously the market started to realize that retail traders are taking good advantage of this kind of moves. So you know what they will do? They'll usually fade the move, in the sense that they'll trigger it into the sell. Your sell stop is triggered, then instantly the market reverses into the opposite direction, then your buy stop is also triggered. At that time, you have 2 orders in the market. One is profit, one is loss. At the end of the day, it's literally break even, so you don't even make anything at all. Then we had another instance where the smart ones would usually be able to trade the market with the priced in data. Fundamentally, I mean technically, right, we will technically trade in the price before the NFP is even actually released, right? So I'll show you guys about that as well. And the other way around is we would actually trade the volatility technically. What that one also means is different from the way I said we'll trade the price in data. What I mean by we'll trade the volatility is we actually sit by the screen, monitor that movement of the market technically, and then once that NFP data comes out, right, I'll show you the trick in that one, which is exactly what we'll be doing today. Then we can forehand anticipate the next directional movement and take the opportunity that comes with it. So I'm going to show you my way of trading the non-farm payroll technically, which is a little bit riskier, right? Really looking into the price action, and then once the data is released, you take advantage of the direction it decides to extend into. So in this simple tutorial, I'm going to show you my simple way of trading the non-farm payroll. It is a little bit risky, right? Don't lie to yourself, it's not a very easy process, but I strongly believe that with practice, right, once you're able to do it well, you can be able to trade a non-farm payroll in a very incredibly profitable way. But I should tell you before anything that this is how I used to trade the market some years back, and then to tell you the honest truth, I hardly trade non-farm payroll these days, right? So as you grow along, you tend to realize that catching short-term time spikes in the market, it's not really sustainable trading practice to become a profitable trader. But you got to experience that along the way before you turn to the pro trader, right? So in my short video, I want to show you how I used to trade an on-farm payroll before, maybe with continuous experiences, actually laid it off as one of my trading strategies. So with experience, I came to understand and kind of realize that with this fundamental data that comes around, we're especially focusing on the highly volatile ones, which number one being the non-farm payroll, unemployment. I kind of realized that anytime the fundamental comes out, like I mentioned in the intro, we tend to get the market fading out the direction of the non-farm payroll before going in the right direction. So fading out basically means the market will intentionally trade in a different direction. Let's say we'll go up first and then later on just quickly push all the way back down. So the trick here, right, the trick here is to be patient and then watch this market actually go up, and then once it starts reversing back into the true direction or the opposite direction, which indeed actually is the true direction, then you as a trader can take massive advantage of it. So I'm going to show you guys about 2 examples or 3 if the time permits of how you could have taken advantage of the non-farm payroll, right? So let's start with Euro USD. So last week we had non-farm payroll, right? I'm going to use the backtest tool. Now the best time frame to look at exactly what I'm teaching you is the lower time frame, right? So you can look anywhere between the 1 minute, 5 minute and 15 minutes for this strategy. But for now, let's just look into the 1 minute first, right? Because when you're using the 1 minute, what it does is that it actually gives you the clear volatility movement, candle by candle and then minute by minute. I'm trying to scroll all the way to where we had that NFP volatility and then use that to explain to you guys exactly how you could have taken advantage of the non-farm payroll. Basically, what you have to do as a trader is that once you know that NFP is going to be released, right, non-farm payroll is going to be released, just about 5 minutes or 10 minutes to the time in which that fundamental data will be released, right? So the best place to check for those fundamentals again is using Forex Factory, right? If you're new to this, perhaps you haven't actually come across Forex Factory before. Forex Factory is one of the reliable news websites that you can see fundamental events being released, right? So let's scroll all the way back to last week Friday and see something, right? So let's see on Friday we had what NFP, basically the non-farm payroll, and then we can see what at 11:30 they were saying what non-farm payroll data is going to be released. You can see here that the fundamental data or the percentage that came for non-farm payroll, which is the unemployment rate for United States, wasn't really a good one, right? Previous unemployment rates was sitting at 5.8 and the current one was sitting at 5.1, which means that 0.1 increase in unemployment in the United States. But you know what, we don't really care about all the fundamental data at all, anyone at all. What we are trying to do is that we are trying to kind of play smart in this market. So like I said, when we have about 5 minutes for those data to be released, you got to be seated by your charts and then following this step that I'm about to teach you. So with this, you don't need to draw any lines, you don't need to draw anything. All you're doing, like I said, is fading the news, but this time you're fading it in the right direction with the market, right? So you can see here that exactly when NFP data came out, we had what this big spike, which first went into the wrong direction, right? So when I say wrong direction, what do I mean here? You can clearly see that this data pushed the market first from that current price before the data was released down. And then within the next minute, that information reversed the whole market back up again, right? So this is the catch. The moment you are seated by your chart and then you see what a high spike from nowhere push into the opposite direction, let's say a down move first, and then within some few minutes it quickly reverses the whole move back up, then that is your catch, right? So at that point, this becomes your entry point. If you can see exactly what I'm showing you, then your whole entry point in the market is just around this area when the market has quickly reversed back up. And at this point, it doesn't matter what lot size you want to put, right? If you want to go all out, it's all up to you. So this exactly becomes your entry point right after what we've had that push on the opposite direction where the market has taken out every pending order which was on the sell side, then you can now come in with your buy orders, instant execution, right? But if you're doing this, you must understand that during volatile news conditions like this, the market moves extremely fast, so you got to be extremely on point, right? You don't want to blink an eye, else you may perhaps miss the move. And then the safe place to realize that you may be really wrong in the market is when you start seeing the market coming back into the first direction, right? So let's say this one would have been about, let's say, 15 pips, right? So you must understand that once you're taking this kind of risk, you can easily be able to, or you can afford to be able to take a loss of 15 pips in the market. But the truth is, if it really goes into your direction and then you're capitalizing on the move, you want to take massive advantage of this because it is a very short-term volatility that moves extremely quickly, right? So this is an example of what I'll show you in Euro USD. Now let's look at an example in New Zealand USD as well, right? So like I told you, don't forget that the very time frame that is going to be favorable for you when you're doing this kind of thing, like I said, is what the 1 minute, 5 minutes, or 15 minutes. I preferably like using the 1 minute time frame for this style of trading if I want to trade the non-farm payroll, right? Now look at New Zealand USD. So let's use the same scenario here. Just like 1 minute or 5 minutes before the news information is going to be released or news data is going to release, you want to be seated by your chart monitoring the price movement. So here, what can you also see? The same thing that I taught you on the Euro USD, the same thing can be observed on the New Zealand USD as well, right? So once NFP was released, we had the market pushing in the opposite direction first, then the next minute we had this small closure here. So that place again becomes what? Your entry, just like I told you in the Euro USD example. This place actually becomes your entry, right? So at that point you can take any massive opportunity that it comes with, right? So your entry here, then you are constantly monitoring that worst case scenario. If this market comes, this is exactly where you want to exit if it goes against your plan, right? This is the exact place you want to exit, right? So that place is your entry, this place becomes your exit. Now let's try to measure how many pips for the exit. That's about, let's say, 13 pips. So you can actually afford to risk 13 pips, right? But if it goes in our favor, then we are literally making 26 pips within a few minutes, right? Within about 2-3 minutes we can easily make 26 pips. So yes, this is my easy and then technical way of trading a non-farm payroll. Maybe let's try and take maybe 1 or 2 more examples, then we'll call this a quit. So we could look at this again in, let's say, Aussie dollar USD, right? So just like I've explained to you with the concept of the Euro USD, New Zealand USD, right? It's the same thing everywhere. Just a few minutes before the fundamental event is released, you want to watch the market, anticipate the direction it would go, but let it go into the wrong direction first, and then once the market reverses into the right direction, that is where you want to take advantage. Again, you can see here in the Aussie dollar USD that the data push the market in the wrong direction first, eventually reverse back, and this becomes again your entry, right? This I know is going to be like an eye opener to most of you. This is actually a game, right, that you wouldn't get anywhere at all on YouTube. Nobody ever is going to teach you this stuff on YouTube. So I know that this is something that is going to blow your mind. Exactly here would be our entry, and like I said, you got to anticipate the worst case scenario, this part being your exit if the market decides to quickly reverse back again, right? But it hardly does that. It hardly would reverse back on you, and then within a few minutes, then you could have capitalized on that quick non-farm payroll volatility and make 20-25 pip. So gone are the days, like I explained to you, NFP used to like pull in huge pips, right, where we could have about 100 pip, 150, 200 pip. But these days barely have even a 30 pip move on non-farm payroll. That is why myself and then some other professionals actually stopped chasing non-farm payroll volatility and actually started focusing on real price movement on the market as to done really sitting by the chart waiting for non-farm payroll data. So this is my simple but in-depth way in analyzing non-farm payroll and then trading it properly with a little bit of twist and tricks, so that I can be able to take advantage of that short-term volatility when I really want to sit by my screen and trade a non-farm payroll. I definitely believe you guys enjoyed this tutorial, so you know what to do. Obviously, you gotta smash the like button. Also, make sure to subscribe to this channel if you haven't done that already. And then if you're already a subscriber, I really appreciate you really being a member of this family. Make sure to keep sharing this channel to your friends and family and then your fellow traders. Also, if you're not following me on social media, the name is KOJOFOREX, KOJOFOREX, on Instagram, Facebook, Twitter, everywhere. One important thing, if you haven't also joined the KOJOFOREX Telegram community, then you gotta click in the link in the description to join the KOJOFOREX Telegram community, because in that community we are a family of one where I keep sharing my free trade signal and then helping people make a lot of money for free. So you definitely want to take advantage of that. Yeah, so without wasting much time, I'll see you guys in the next YouTube video. Peace out.